Hey everyone, welcome back to another edition of Learning to Trade Day Trade with Tony. This episode or this tutorial will go into using the MACD or the Moving Average Crossover Divergence Indicator. Really about finding out directionality, but it can be used for so much more. It's actually a really good technical indicator, but it is a lagging indicator, like most technical indicators are. So treat it with caution and use your own strategy with it. Back test before you actually put money on the line. And if you enjoy the tutorial, remember to hit the thumbs up button, subscribe to the channel for more. And if you want to see me putting strategies like this into play, then hit the notification bell. You get to see me trading live 90 minutes before every trading day, and occasionally the last hour of the trading market as well. So hit the notification bell, subscribe, and make sure you smash that thumbs up button. Enjoy this tutorial. Hello and welcome back to another episode of Day Trading with Tony. And in this video, I'll be taking a look at the MACD, or the Moving Average Convergence Divergence Indicator. And I'll be using it to identify market direction. So the first thing that we need to do is plot the indicators. We go to Indicators on TradingView and we move down to MACD, not MACD Strategy, but MACD. You can see that it plots the indicator right here at the bottom of the window. And at this point, you'll notice that there are a couple of interesting features. There's the histogram, and then there's these two moving averages. Now, the blue being the 12 and the orange being the 26. And the histogram is essentially, it's based on the difference between the two. So the idea is, and there's a multitude of ways you can use the MACD, but for directionality, a lot of traders will use it a couple of different ways. They will use crossovers, just like a moving average crossover, because essentially that's really what it is. It's just plotted somewhere else, and they use it at an extreme level. So here you can see that we crossed over to the downside, and that was basically at the top of a significant move. We also crossed here at a pretty low level, and that led to buying opportunities. Crossed here, it's a selling opportunity, buying, etc., etc. Now, the thing is, if you're going to use the moving average crossover in the MACD, I would suggest that perhaps it's better off once we get to a pretty oversold or overbought conditions. And while this doesn't technically, it isn't technically used as an overbought or oversold indicator, suffice to say that the higher you are or the lower you are in this section, when these crossovers happen, the more likely you are to see the trade work out. So that's just an extreme, and you know when you're at extremes, it makes sense that the signal would probably work out in your favor. There is also the histogram, and some people just use the histogram as whether you should be buying or selling, and then they'll use some other indicator on the actual price action itself. So, for example, in this entire area here, you would have been looking for sell signals. In this area here, you would have been looking for buy signals. So the histogram itself isn't necessarily the most reliable way to trade it, though. Well, at least from my own personal experience. There is also a zero line, which you can see that we flip back and forth, and some people just trade whatever direction here the moving averages are. So we cross here and we'll be looking to go long. We cross here. You see, it does work. It gets you in the trade a little bit later, but it's also a little bit more conservative. So there's the three ways that traders use it most that I'm aware of. Now, they try to profit from that. And those are the three different ways it works. Let's go ahead and drill down to, say, a 5-minute chart and see how this plays out. So the same stock, this is Apple. You can see that we had a crossover that was extremely overvalued. Nice selling opportunity, went down to the gap. And you can definitely see how that played out and how you would hope and anticipate that it plays out. You can see the crossover here. and a crossover there. So certainly that sell signal worked and so on. Pretty straightforward again. Though, and I suggest that this is probably going to be the case, this in this entire area here, you're going to look for buying opportunities. But like in a 5-minute chart, it really doesn't pan out well if you're going to use the histogram. If you're going to use it, it's typically going to be a longer term type of setup. The crossovers at extremes, though, does tend to be fairly valuable. You can also use the histogram itself for signs of divergence. And divergence is just simply when you are, for example, you're making higher highs, but the histogram itself is not. That could show signs of exhaustion. And you can see that we drift a little bit lower. Now, this is a 15-minute chart, so it's not as drastic. It's more of a longer-term chart thing as well. So it does work in both directions too. For example, if the histogram, if we're going lower, and the histogram like here is actually rising at that time, well, that's divergence. And because the price is going lower and the histogram is going in the opposite direction, it shows a slowing of momentum. That's kind of a sidebar part of this indicator, but it is yet another way to use it. Again, though, extreme crossovers tend to be probably the most reliable. And then, of course, if you marry that with support and resistance or price action, then you start to basically begin a system.